What's up, everyone? Welcome to This Week in Crypto with Santiment here on December 17th. I'm Brian here with my co-host Dino. We're seeing some interesting moves at the moment. Really, for the first time in a couple days, we're seeing some significant moves downwards, and it just sort of happened in the last hour or so. We were kind of hovering around 47 to 47.2K for Bitcoin, and all of a sudden things kind of slipped down. Got to as low as about 45.8K, and it's up just a little bit higher than that, around 45.9, 46.0, depending on the exchange you're looking at right now. But we're going to try to unfold exactly why this has happened, how healthy the markets really look, whether utility continues to look strong like it has for the past few weeks, whether whales might be impacting this down move further, or perhaps this is a very opportunistic dip buy opportunity that we can all get involved in. We're going to do our best to really look at the normal metrics that we look at on a weekly basis with you guys, as well as a few new ones if we have time, and of course take recommendations from you regarding altcoins that you'd like us to analyze, and maybe see if there's some dip buy opportunities there, because most altcoins, as we see, are sliding down more than 10% in the past week. And typically throughout 2021, knock on wood, that's been a good opportunity to buy altcoins for cheap. But it's all going to hinge on just how healthy Bitcoin is, of course. And if it is healthy enough to rebound, there will be some altcoins here that can rebound with it. And of course, I'd like to remind everyone that our calls are intended to be educational and based around objective data that has historically proven to be true, whether they're bullish or bearish divergences. So keep that in mind and understand that what we do here is not investment advice, and more so for educational purposes to help you navigate this platform on your own, excuse me. So that being said, Dino, what are you seeing right now in terms of the past week of prices and how things currently stand for Bitcoin and other projects right now?
Yeah, so literally as we speak, I mean, it's funny how this happens. I gotta say, more often than not, there is some very strong event in Bitcoin's price action, like either an hour before we go live or exactly as we go live, or like in the middle of our call. So
Yeah.
if you guys want to time the market, just watch this call. There's like a 70% chance that something will happen, good or bad. Generally, like I said, we're just now charting a lower low, it seems like, and breaking a 46K resistance, at least for a little while, which is a little bit concerning. On the whole, though, I even use this as a thumbnail of this video. Last couple of days, really since the start of the week, we have seen Bitcoin's network level activity finally start to taper down, which, there's still no cause for great concern, but it is an indicator that the network level activity might be slowing down steadily over the next couple of weeks, especially with the holidays coming up. And then if we take that into account, the question then remains, is there going to be fundamental support for Bitcoin to try to push back up above, let's say, 50K by the end of the year or into the end of the year, given that there's a likelihood, and there already seems to be some clues that there's a increased likelihood that its network-wide activity is going to drop. So that's one of the things we're going to talk about on this call. The second thing, a little bit more sort of optimistic, is that we are seeing signs of sort of wholesale bearish sentiment. So we're going to show sentiment metrics that are now very low. Derivatives or funding rates are still sort of undecided, but I think it is fairly clear that at this point in time, whatever bullish euphoria there was, even after the December 4th crash, which there was a lot of, like during the December 4th crash, I mean, we talked about it, but if you weren't on one of these calls or you don't read our weekly reports, you would be surprised what our social metrics showed. In fact, they were pointing to a whole lot of people being extremely excited about Bitcoin at 45K, given the opportunity to buy the dip. There were a lot of mentions of buying the dip, and in general, quite a surge in bullish and bull-related terms. We have seen all of that disappear over the last 2 weeks. So generally, I think there are some hopeful signs that the market is finally, sort of the retail sector in particular, is finally giving up on Bitcoin's chances of pushing through this turmoil. And this is where we want to be, historically at least. When Bitcoin sentiment is low, when the retail sector and the crypto community on the whole agrees that there is no sort of way up, and that they were looking at a bottom of the barrel, Bitcoin usually jumps up. That is obviously assuming that other fundamentals are strong, which some of them are kind of shaky at the moment. But that's, Brian, sort of in a nutshell what we're seeing the last couple of days. But as we go through different metrics, we can talk more about specifics for BTC.
Yeah, absolutely. What Dino said is exactly what I'm seeing as well. It's a lot of sentiment starting to nosedive, and historically, any of you who followed our videos have learned that crypto markets typically move the least expected direction from what the crowd is expecting themselves. And right now, the expectation is for things to continue to drop. And it doesn't mean that things won't drop because of that. It just means that there is an increased likelihood of things rebounding when there is quote unquote blood in the streets. And there's quite a bit of pain and pain markers all over our metrics showing that people are beginning to turn quite negative and sour toward crypto, really for the first time all year that I've seen for at least this extended amount of time. So that being said, now we're looking here at the main Sandbase platform on the charts tab. If you're on Sandbase, just click on charts here. If you have a Sandbase Pro account, you'll see everything. If you do not have a Pro account, you'll see a bit of a time lag for the previous 30 days. So what we're looking at now here is our circulation metric, which is indicative of how many tokens are moving on a daily basis. These are your unique tokens only, so it doesn't account for things like wash trading, repeated use of the same coin for a trade over and over again. It's only counting each individual coin once. And we find this to be a pretty nice, true utility metric for how Bitcoin is looking at any given moment. As we can see, the trend line here, which is a 7-day trend line, has started to nosedive beginning about 12 days ago. It peaked around December 5th. Everything was looking quite good, especially after the big drop here, right, that happened on the 3rd and nosedived all the way down. It got to about the 43Ks before rebounding a little bit. And ever since, things have started to become stagnant, and the people who were yelling, buy the dip, were kind of let down by the fact that things have continued to kind of gradually slide. And 45.8 is about as low as we've seen since that very short-term burst into the 43Ks on the tail end of this dip here. So circulation now is back to where it was. It looks like in late September was the last time the trend line was here. But the good news is, on a monthly scale, for those wondering on the NVT chart how we're looking, it's still looking good. We're in our 3rd straight month for Bitcoin being in semi-bullish territory when relative to the trend lines. And this chart here has been quite historically accurate. Obviously, with these green bars, we've continued to see some volatility, but it does indicate that with the reduced prices, even though circulation has dropped a tiny bit, the prices have kind of dropped more. And that's why we're not seeing red bars right now, even with that mild drop. So definitely worth noting that on the macro scale, things look okay. On the shorter term scale though, this slide here, seeing circulation look something like this over the past, 3 to 4 weeks, that's a little scary. You definitely would prefer something a lot more like that. Go ahead, Dino.
Just pretty much what you said. It's pretty concerning in the short term. Another metric that sort of does the same thing or sort of shows the same pattern are daily active addresses. Like I've been just looking at it over the last hour or so. At the moment, the rolling 24-hour daily active addresses are at 894,000. I don't remember. So, I mean, we talk about daily active addresses on each of these calls. I don't remember the last time, maybe it was like, I don't know, 3 months ago, that Bitcoin's daily active addresses were below 900K on one of these calls. So on the whole, the fact that, and you can kind of draw the same downtrend of the peaks here in daily active addresses as of recent, right? So generally, it seems like network level activity for Bitcoin is going to start dropping off. This is, I mean, to an extent, it is to be expected, given the fact that the price is just very uninspiring at the moment. But it's still a concern for Bitcoin's fundamental growth. So on the whole, maybe there's going to be some Christmas and holiday lull in the amount of transfers and the amount of value created on the Bitcoin network. If that is the case, then there might be some obstacles to pushing beyond any particular resistance level without any sort of friction, because on the network activity, we're just not seeing, at the moment at least, we're not seeing a whole lot of confidence among the users of the Bitcoin blockchain and the holders of the Bitcoin coin in order for us to push above 50K, at least for the moment, right? There's a lot of things that could change in the next couple of weeks, but given the fact that there's going to be holidays, people, just hanging out with their families, spending time with their loved ones, I am struggling to see how this trend moves in the opposite direction, or how it starts moving back up over the next coming weeks.
Yeah, and sometimes it just takes a really large move in one direction to really kickstart the traders again. Part of why things tend to become stagnant is because of flatness or just a gradual slide, kind of like we're seeing. Obviously, in the last hour, we started to see a little bit of action on the downside, but really not enough to really move the needle. Also, the time of day, at least, here in the US, it's very early in the morning, so traders aren't fully active yet. But all it takes is, one kind of prime time big move, either up or down, and suddenly people start having major opinions of where the price direction is going to go again. But stagnancy like this tends to happen in this scenario that I just laid out here. So something to keep in mind. So circulation and daily active addresses, circulation's looking decent still. Active addresses, not quite as much, but we have plenty of other metrics we can look at. Why don't we first do MVRV, Dino? I think this is a good thing to spotlight right now to kind of indicate that things are continuing to look negative. We're at around negative 12% on the 30-day intraday chart right now. Obviously, we've talked about negative 15% being that coveted opportunity zone. But what are you seeing here yourself?
I mean, pretty much 2 hours before the call, Bitcoin's MVRV, the 30-day MVRV was at around minus 6%, which was basically quite, indicating that, yes, we are slightly undervalued, but it could still drop much further down. For people that are not familiar with this metric, I always sort of like to give the introduction of what MVRV really is. It's an on-chain indicator that tries to visualize the average profit or the average loss of a group of addresses, right? So the 30-day MVRV ratio, which Brian is showing, essentially what it does is it shows the average profits or the average losses of all addresses that are holding or have acquired Bitcoin in the previous 30 days. So this is a on-chain metric that is obviously very, very sensitive to price action and price volatility as well. So at the moment, Bitcoin's 30-day MVRV is at around minus 12%. That means that on average, addresses that have acquired Bitcoin in the previous 30 days, so swing traders, are down 12% on their initial investment. So the way that people use this metric is they look at historical peaks and historical bottoms. So the higher the MVRV ratio gets, the more unrealized profits there are. And so there is greater risk for you to enter into a trade, because what you're actually doing is you're moving into a trade against a lot of people that are sitting on a lot of profits and that might be looking to dump on you and reduce their exposure a little bit. So then on the other side of the aisle, the lower the MVRV ratio is, the more opportune time it can be to accumulate. Obviously, this is just one signal, and historical performance doesn't always equal future results. But historically speaking, Bitcoin's 30-day MVRV ratio has shown a tendency, at least, to bottom out around 15%. So 15%, minus 15% seems to be one support zone for Bitcoin's 30-day MVRV. If we look at the 3-year scale for Bitcoin's 30-day MVRV ratio, you will see it a bit more clearly. There have been a few outliers where Bitcoin's 30-day MVRV ratio has dropped below this minus 15% threshold. We've gone to as low as, I believe, like minus 40% during the Black Thursday crash, but those are clearly like black swan events. And even when they happen, they usually don't last for more than a couple of days. So with this drop to minus 12%, we are once again getting very close to this potential bounce back zone. We've retested it a couple of times already, and we're able to bounce back off of it. So I am hopeful that we'll be able to do it once more. The difference now is that previous times that we were at around minus 15%, network level activity for Bitcoin was still kind of strong. Now it's not. So remains to be seen. As you can see, if we drop below minus 15, minus 20%, so let's say we drop to 40K now, right? So with Bitcoin dropping to 40K, its 30-day MVRV ratio is going to easily drop to like minus 25%. And at that point in time, historically, we will be very, very low. Like there will be maybe a couple of weeks in entire history of Bitcoin that its 30-day MVRV ratio would be that low. And then the question that you need to ask yourself is this low enough, or do I believe that this market is undervalued enough for me to try and consider this an investment opportunity? So like I said, that's a question for everyone to answer. But yeah, what's good about this chart in particular is that we are getting at close to historical bottoms. So remains to be seen. What's a little bit less pleasant on the eye is Bitcoin's long-term MVRV ratio. So this is what we're seeing in terms of its short-term trader returns. So short-term trader returns very low. A lot of people are below break-even. Anybody that wanted to sell has probably sold already, so there's not going to be a whole lot of sell-side pressure from swing traders. However, when you look at the long-term MVRV, what we see is that we are currently at roughly around break-even, right? So around minus 1%. That means that on average, all addresses that have acquired Bitcoin in the previous 365 days are currently minus 1% of their initial investment. So they're basically, they're where they started, right? On average. Here you can see that we are far away from historical bottoms yet. So there are several levels here that we want to keep an eye on. One is at around minus 20%, and then the other one is around minus 34 to minus 35 or minus 40%. So generally speaking, long-term holders still have some ways to go to the downside before we can say that historically we are at this massively undervalued range. Like especially if you look at, it's not just Bitcoin, like Ethereum's long-term MVRV is still well into positive. It's like 25% or something. So there's still quite a lot of trader returns, long-term trader returns for Ethereum in particular. There's still a lot of profits that people are sitting on. Yeah, let's see how low it is now. So it's
33.5.
Okay, I think if you zoom in, it will be even slightly lower now. No, it's
36 still.
Okay, so it dropped recently, I guess, to around 25, maybe 2 days ago. But anyway, even worse, right? 35%, even worse. There's basically on average, long-term Ethereum holders are still up 35% on their initial investment in the coin. I mean, not worse for them, but worse for a potential to enter into a trade, right? Because you would be entering into that trade against a lot of people that might be feeling very, very anxious about the market and that might decide to take these profits off the table finally. So yeah, short-term wise, we are moving into that possible opportunity zone in terms of Bitcoin's MVRV. On a long-term scale, like on a macro scale, there is more room to the downside before we can say, look, we're clearly in historically undervalued territories. So I would still advise caution, even though 30-day MVRV is looking good.
Yeah. So 30-day, that's the one where you really get a lot of swing trade opportunities. And right now, just to check on the 30-day for Ethereum while we're here, it's at least not looking great for Bitcoin, or it is looking decent for Bitcoin, excuse me, because it's between that -10 to -15% range right now. And on the Ethereum end, we're looking at more of a modest -5%, likely because, we really had that big spike just a couple days ago, getting back temporarily. I think you got above 4,100. So Ethereum has been doing a bit better than Bitcoin over the past week. But both are still in negative MVRV territory, which equals a slightly increased, better than average chance of recovery for price.
Yeah, and Brian, I think now might be a good time to also talk about whales, because they have been very undecided as of late. Last couple of weeks, there's basically like a seesaw in whale holdings that we're seeing. So they're not really moving into any particular direction. They seem to be sort of undecided about this range. So what Brian is showing, or going to be showing right now, is the total holdings, or the total amount of Bitcoin that is being held by addresses that own between 100 and 10,000 BTC. So these are very, very large addresses, right? All of these are Bitcoin millionaires still. So at the moment, what we can see, or actually let's talk about what we've seen since the start of the year, since the start of the week up until Wednesday. So we've seen these combined holdings of large addresses drop by about, I believe, 30 or 40,000 BTC. So that's still like $1.4 billion at these prices, maybe even a bit more, that has been offloaded by these addresses to begin the week. And so after this latest downtrend, or actually like midweek downtrend, we have seen these addresses once again move into the upward direction. So there is a little bit of potential accumulation that we're seeing on this chart. In particular, there's been about 30,000 Bitcoin that they have acquired since Wednesday. So it's a very short-term sign of possible accumulation by Bitcoin whales. But if you look at the last couple of weeks, first of all, the general trend is down since October. And then second of all, I mean, this chart, at least to me, doesn't instill a whole lot of confidence that large addresses are sort of a monolith of Bitcoin strength, right? That they believe in its short-term or even mid-term potential. Generally, it seems like there's some flakiness on there. I would not be surprised that a lot of this flakiness, especially at the start of the week, this drop of about 40,000 Bitcoin, I would not be surprised that this was prompted by, the FOMC meeting that was supposed to be held and that was held later in this week. So there are some macro indicators that might spook whales for the time being as well. So good that we're seeing a little bit of uptick in the last couple of days in whale addresses. Bad that generally they are absolutely not showing signs of consistent strength and consistent confidence in Bitcoin's price action. Remains to be seen. I mean, if we really see Bitcoin whales move into Christmas, consider doing some Christmas shopping and, just buy up a whole bunch of BTC. Maybe we see another 60,000 BTC increase on this chart. Then, yeah, we can talk about a more bullish signal. For now, I'm still a little bit reserved about this. It doesn't seem like overall they're super excited about where Bitcoin is headed.
Right. Yeah, I agree, Dino. We're definitely on a downtrend, right? Like at its peak in late October, this group of whales was holding about 49.5% of Bitcoin supply. Now they're down to 48.9%. That 0.6% of supply may not sound like a lot, but if I move this over to absolute numbers instead of percent, you'll see just how big of a drop that really is. 100 to 10,000, merge that. Full screen, ignore these trend lines here. But yeah, we're essentially going from 9.32 million on October 25th to where we stand now, 9.24 million. So we're talking about 110,000 Bitcoin that was being held by these whales almost 2 months ago compared to now. And that's a significant drop no matter how you look at things. We can look at historical drops, over the last 2 years, and this is around a top 5 one in terms of just this scale of sliding. We had the one that happened from April to May, which was kind of indicative of the big drop that was about to happen in mid-May. We had one in late September going to October, early October, and then we had one right after Black Thursday when the whales incorrectly assumed that prices would stay down after the big COVID fears that were happening. But this one is somewhat comparable considering how low it stayed for this amount of time, when historically, as you can tell, the amount of Bitcoin held by these whales generally only goes up. So very interesting to see there.
Yeah, for sure. I think what we should do now is we should look into some off-chain stats for BTC, specifically our social sentiment and funding rates. But in the meantime, while we're looking over those, I do want to ask people in chat, just let us know what coins you would like us to analyze. All right, this is the opportunity for you to type in chat the tickers of coins that you want us, Brian and me, to do some very quick analysis on here live on stream. Like I always say, bonus points if the coin that you are interested in lives on the Ethereum blockchain, because currently the on-chain coverage that we provide includes Bitcoin, Ethereum, all Ethereum-based coins or ERC20 coins, Ripple, and Litecoin. So those are the coins and blockchains that we have on-chain data for. Now, the coin that you're interested in might live outside of that ecosystem, and we still have a bunch of unique data for it, like social data, development activity data, derivatives data, so we can still do a bunch of fun stuff. But if you really want us to dive into things like, network level activity, whales, exchange inflow, outflow, these types of things and markers, we can only currently do for the coins that I've just mentioned. So let us know in chat which coins you would like us to do, and then Max will tally up your votes and he'll create a poll so that everybody can vote on the most popular coins on that list, and the one that gets the most votes wins. Cool. Brian, let's look at the Bitcoin related sentiment. So at the moment, yeah, so social in terms of general social mentions, there still seems to be quite a bit of interest towards BTC in the last couple of weeks since the correction. Not really too surprising, because everything is down and Bitcoin is the primary reason why. So these metrics show the total amount of mentions of BTC on crypto social media, which is the chart in blue, and then the chart in purple shows, or like pink, shows the dominance or the relative popularity of Bitcoin on crypto social media relative to other top 50 cryptocurrencies by market cap. So you can see that that social dominance has also been climbing recently as a result of Bitcoin's inability to capture a 50K support, I would say. Either way, I think what's interesting, or more interesting than these two metrics, Brian, in particular, is the average sentiment of the traders towards the Bitcoin's price action. So what we are seeing right now, and this is what Brian is showing, is it's a metric that we call weighted sentiment. So let me first explain how this works, right? So last 3 years, we've been collecting social data or text data from thousands of crypto-related social media channels. So these are Telegram groups, crypto subreddits, Twitter accounts, popular Twitter accounts dedicated to crypto, professional trader chats, some forums, wherever we can find main topic of discussion being cryptocurrencies, we try to listen in on those conversations. And so what we've done then with that data is we've created a machine learning algorithm which parses all of these messages about specific coins, and then it labels them as either positive in nature, so bullish, negative or bearish, or sort of neutral or ambivalent, right? So this is the end result. A chart that looks like this that we call weighted sentiment, which essentially what it tries to show is the average crowd bias towards a coin. So the higher this sentiment bar is, which is this pink bar, the more bullish there is of a sort of consensus towards a coin, in this case Bitcoin, and then the lower that it is, the more bearish the crowd is towards this particular project. So at the moment, or really in the last maybe 48 hours, we're seeing a fairly significant drop in Bitcoin related sentiment. So what that might suggest is that with Bitcoin's inability to maintain or to sort of recapture the 50K mark, it seems like the retail sector might be coming too anxious and too impatient to wait. So they're moving against BTC. It seems like it's the sort of the lowest sentiment towards Bitcoin since mid-October. So we're basically looking at like a 3-month low in terms of Bitcoin related sentiment. We are seeing some signs of that in Bitcoin's funding rates as well. Like for instance, there was on Binance a few days ago, we've dipped slightly into negative funding rates for like a couple of hours. On Huobi this week, we had the lowest funding rates since October. These have all sort of bounced back up, and now they're in sort of a neutral territory. But those like dips also point to a growing bearish consensus, I think, among derivative traders in particular. So there's more sort of signs in the past couple of days that on the whole, the market is looking more and more fearful towards BTC. So what does that mean about Bitcoin's potential? Well, here we go. I think, okay, poll is up in chat. So guys, feel free to vote on the coins that you think should get our attention. So generally speaking, I think that first of all, it's too early to say. I would like us. Let's talk about what I would like to happen. I would like us to be in this very, very bearish zone for at least like a week or two. So I would like to see what happened between like June and July this year, or between August and September of this year, right? So I would like us to see these periods, these large drop-offs in the average sentiment towards Bitcoin, where the retail sector has completely lost faith in the market's ability to recover. This is, historically speaking, again, where Bitcoin has a better chance, or seems to show a tendency to recover from. So we've done some backtest on this phenomenon where we've looked at what happens with coins, not just with Bitcoin, but other cryptocurrencies as well. We've looked at what happens with them after they hit peak bullish sentiment, right? So after they hit these massive spikes in the average crowd bias. Generally speaking, it seems like that peak often coincides with the local top, or it shows an increased risk of an upcoming correction. So in other words, when everybody's super stoked about the coin, it's probably not a great idea to move into that trade, right? When there's blood on the streets, the coin might be undervalued, and historically, this might present an opportunity for you to consider an opening a position. So like I said, we've just dropped into this negative territory for the first time in quite a while. Give it a couple of days. I wouldn't make any rash decisions just yet, but it's at least a hopeful sign on sort of a micro scale, Brian.
Mm-hmm. I like to look at the 30-day trend line on this too. I think especially on a macro sense here, like we're looking at the 2 years, seeing the ebbs and flows of when this red line is above or below that break-even point can actually give you a nice grasp as to just that sustained level of positivity or negativity that Dino's alluded to, where you can see these big uptrends here and the big downtrends here kind of coinciding with tops and bottoms a little bit. You can see this one here, kind of coincided pretty well with the top. And eventually after this retracement, things were turning negative and people were in denial, even as things were recovering and things were negative. And then, eventually, when we had this big drop in mid-May, things got positive again. We went negative right around the bottom, which is no coincidence. And then we got positive again more recently, right around the top, when we hit that recent all-time high in early November. So where we stand now, you can see that red trend line starting to go back down to the even point, but it's not there yet. It could, continue to stay up if there's some big move like we talked about, or it might start to fall if gradually we start to decline closer and closer to 40K or even beyond that. So interesting to see here. I really like weighted sentiment, especially when you can kind of look at it from a zoomed out perspective like we are right here.
Yeah, so I mean, we can just quickly click on a couple of funding rates just to show people. Let's click on Binance and maybe FTX. Yeah, there we go. We already got it here. So you can see Binance's funding rate here in yellow, and you can see a couple of days ago there was this little blip into the negative territory, right? And this is what I was referring to a moment ago. So funding rate is a fee paid by one side of the perpetual contract to another. So what that means is that when the funding rate is high, or the higher that it is, it means that Bitcoin longs are paying Bitcoin shorts for their open positions, and the market is net positive or net bullish. And then when the funding rates are low, shorts are paying longs, and the market derivatives traders at least are net bearish. Generally speaking, you can look at this chart to make up your own conclusions, but this funding rate works in similar ways like Bitcoin's social sentiment. So when it's very high, it points to sort of an excessive greed and euphoria among the Bitcoin traders. And as a result, there might be a risk that we are looking into like a pronounced drop in the coming days or weeks, right? So you can see basically this entire period between January and April of this year, several large spikes in Bitcoin funding rates have coincided with basically all of the local tops for Bitcoin at the time. And then we've also seen starting in mid-October, once Bitcoin broke 55K once again, we've seen it move back. We've seen these funding rates move back into this extremely high territory. Like it might not look like it here, but these spikes in sort of the start of this year, these are some of the highest spikes in Bitcoin's funding rate history. So they were massive in scale, right? And that's why we saw billions of liquidations back in May once the market crash finally happened. So on the other side of that scale, these major drop-offs in Bitcoin's funding rates. So we are now talking about things like what we saw back on Black Thursday 2 years ago, what we saw during the May correction as well, and more recently, what we saw just like a couple of weeks in the early October. So we've seen these drop-offs in funding rates which point to a period of time where the derivative traders are net bearish. So they're moving back to they're opening more shorts. They're paying money to longs to sort of nurture their short positions. And in general, they are quite confident about Bitcoin's inability to recover. Similar to social sentiment, these have been periods where Bitcoin was able to bounce back. So we're not there yet. Like we're not into this sort of undervalued or underappreciated zone, but there are like snippets of this bearish proclivity among derivative traders in the last couple of days. Like I said, this is on Binance. On Huobi was even higher, or sort of it was a stronger drop. I mean, I think it was on BitMEX a little bit that we saw a drop the last couple of days. So there are a few exchanges that are exhibiting a short-term drop in their funding rates. Similar to social sentiment, I would wait. Like I would wait at least a week, or sort of what I would like to see. I would like to see them being negative or being extremely low for at least a week. That would, to me, suggest okay, we're definitely sort of we've seen the capitulation of all bulls in the market. We've flushed out all of the longs. And now, assuming there's some fundamental strength on Bitcoin's network level activity, we can see path forward. We're not there yet, but if we drop a little bit more, we're probably going to get there. So yeah, that's as far as Bitcoin's funding rates are concerned. There's a few other metrics that we might want to mention, like MakerDAO related metrics, which I thought were quite interesting. But let's leave that for the end of the stream if people want us to go back to it. We've already got a bunch of questions or a bunch of coins that people would like us to analyze. So Max, maybe tell us what the top coins are, and we can start by looking at some of them.
First place right now is the FTX token, FTT.
Oh, okay, interesting. Okay, Brian, you wanna start us off, and then we can do it together.
Happy to, yeah. So a good way to start here might be the MVRV metric, where we're seeing. Let me zoom in a little bit because we're still on 2 years. We'll just go last 6 months. So in the last 6 months, we've seen a high for FTX of about 63%, in the positive direction, and the low was about negative 25%. But for rule of thumb purposes, we like to look at around negative 15 and positive 15% as those really juicy opportunity and sell-off zones. And right now, we are actually in the opportunity zone. It looks like with this slide, which started on November 8th, which was, I believe, the exact same day that Bitcoin made its all-time high, we've seen a price retracement of almost 44% for the FTX token. So that's a pretty massive slide. This chart has really been two stories, really, going from July up to the all-time high in early September, and then early September all the way to where we are now. And where we are now shows that people are in pain. People have really rode this wave down to the point where they are they've breached the negative 15% zone, sitting about negative 17.5 now, which historically speaking, for any asset on the 30-day scale, is an indication that prices can't go too much lower because MVRV does hit a limit eventually. You know, sometimes it might go beyond negative 20%. I've even seen negative 30% at times, but usually those don't last long, and there's some event to push the price back up. That being said, we also have to make sure that Bitcoin's health looks good enough to allow coins like this to recover. FTX token is still a relatively new asset here, but what are you seeing on the MVRV side, Dino?
So not just MVRV, which is low. I mean, it's going to be low like for most coins, because most coins have been suffering the last couple of weeks. So on the whole, we're going to see negative short-term MVRVs. What I find interesting about FTT, I'm just looking at the charts simultaneously. I like its network profit loss chart. I like it very much. So if you look at FTT's network profit loss, so okay, that's the chart. So all right, let's talk about this chart, right? What is it, first of all? Network profit loss is a metric that tries to calculate the total daily ROI of all network transactions or blockchain transactions. What I mean by that is it works very simply. For each unit of FTT that moves on the blockchain, we take the price at which it was last moved, and we assume that this was its acquisition price, that this is the moment in time where that unit of FTT was bought by a person, an address. And then the next time that that same unit of FTT moves on the blockchain, we take that price and we assume that this was its sell price. This was that address moving out of that coin, that particular unit of FTT. So the difference between those two prices on a network scale becomes this metric. So the higher the network profit loss, in general, the more profit taking there might be in the short term, or it basically shows a point in time where on average, coins that are moving on the network are moving at a significant profit relative to the last time that they changed addresses. And then the lower the network profit loss bars are, or when they go into the negative, that means that on average, at this point in time, units of FTT that are moving on the blockchain are moving at significant loss relative to the last time that they moved on the blockchain. So I like this chart for a couple of reasons. First of all, I like what happened back in September, where there was this massive spike in profit loss. There were actually a couple of them coinciding with local tops for FTT. That makes perfect sense to me. We see it quite often with low and mid cap coins. These large spikes in network profit loss essentially point to like short-term profit taking and short-term sell-offs that are usually, especially if a coin is sort of reaching an all-time high or something, it's usually very difficult for bulls to absorb because it requires a whole lot of buy-side pressure, and not a lot of people are interested in buying up a coin and buying up that sell-side pressure while it's sort of pumping like crazy, right? Or while it's already up by 50 or 70 or 150%. Now, what we're seeing more recently is even more interesting. So we're seeing these several large drops in FTT's network profit loss. So what that tells me is that in the last couple of weeks, we have seen more often than not FTT holders actually start moving their bags at a loss. And actually seems like a pretty significant loss. So generally speaking, these are sort of pain markers in FTT's network activity that point to quite a bit of maybe disenchantment with the network. I'm actually looking at its all-time values, and these are some of the biggest historical drops in FTT's network realized profit loss. So what that means is that these are some of of the biggest events in terms of potential, let's say, network level capitulation, right? There's a lot of weak hands probably moving their FTT and maybe selling them on exchanges or whatever they're doing with them. On the blockchain side, they're being moved at a significant loss. So historically, obviously, there's, like I said, there's no silver bullet when it comes to metrics, but historically we have seen these drop-offs in network profit loss coincide with periods of price recovery, especially if there's like strong fundamental activity on the network still. If there's a lot of people panicking out of the coin, there is sort of a potential for people to buy that dip and look to sort of, and which in results sort of starts inflating the value of that coin. So I think another metric in that sense to look into, Brian, is exchange inflow for FTT. So I actually quite like that metric as well, because it seems to me it paints a quite a nice picture. All right, cool. So this is exchange inflow for FTT. What it is it's a metric that shows the amount of FTT moving to non-exchange wallets over time. So what I like about this metric is, well, first of all, you can see several times that the FTT exchange inflow spiked around local price tops, right? So it spiked in September, it spiked then at this local price top in October while we were still dumping, and then it spiked in November when it started to recover, actually at the end of its recovery in November. So there were like massive spikes in exchange inflow around local tops. But and okay, first of all, what does that mean? That basically means that a lot of people are moving their coins to exchanges while the coin is pumping. So there's going to be, similar to what I said a minute ago, there's going to be a lot of obstacles for FTT bulls to absorb this sell side pressure, because not a lot of people want to buy into this sell wall while the price is already up by like 50 or 100%. It's very difficult for them. Like, just consider it for yourself. Would you buy FTT after you've already missed out on 150% uptick or something, right? So there's going to be less of a buy side pressure at that point in time. However, what you see back in July is you see several large spikes in exchange inflow around local bottoms. And this is something that we also see very often, is that around local bottoms, we see big spikes in exchange inflow and big drops in network profit loss. So what that basically is a picture of weak hand capitulation. A lot of people moving their bags at a loss, but moving them to exchanges. So it's basically a perfect storm of people getting the hell out of this coin because they don't believe that it can go any higher. They think that it's, for now, this coin is dead in the water and we might as well go and try to make our money elsewhere. This is what I would like to see now for FTT. Like in the next couple of days, we're already seeing spikes in drops in network profit loss. So people are panicking out of this coin a little bit, but its exchange inflow is still like relatively low. So I would really like to see a couple of like major upticks in exchange inflow, because that would tell me, okay, everybody is super panicking about FTT's potential, and it might present an opportunity in the short term. So yeah, I mean, it's a way that I would maybe analyze FTT's current on-chain activity. Now, in terms of network level activity, it's not looking great, but most coins aren't looking great at the moment, right? So let's look at the FTT's daily active addresses. They're currently at about like 250 or something. They've dropped quite significantly in the last couple of months. To be honest, that's completely expected. Like most of the coins that you look at on the Ethereum blockchain look like this. They've had this massive surge around maybe 3 months ago or so with this latest rally, and then today they're a shell of their former self. So currently there's about 250 addresses sending or receiving the FTT token on a daily basis. That's quite low, especially compared to like 1,500 addresses that were exchanging this coin at its peak just a couple of months ago. That being said, I mean, 250 addresses it's not bad. Like in a vacuum, that's still a whole lot of interest in this coin on a network level. Like I would say 250 addresses a day probably puts this coin in the top of maybe 30 to 50 coins on the Ethereum network. So not great, but also not terrible, right? So generally what I would look for in terms of network level activity, if FTT continues to decline, I would at least like to see some signs of sort of renewed interest in the coin. So ideally, a bullish divergence would look like FTT's price continuing to drop, but daily addresses and network growth, which is another metric that sort of tracks the health of the network, these two metrics start moving upward. So that means, okay, market capitalization is declining, but the amount of interest in the coin on a network level, the amount of value created on the network on a daily basis, the amount of value being transferred between addresses on a daily basis is growing. Currently, it's not. It's kind of plateauing. But like I said, it's the case with most coins. Ideally, what you would like to see is you would like to see these two charts start picking up again, like they did back in April. Currently, they're just, they're not doing it. So, proceed at your own risk. There's obviously still a potential for FTT to drop, but I do at the very least like the fact that people already seem to be panicking. This is where I like to be. Like when I'm looking at a potential investment opportunity, I like to bet against a lot of people, selling this coin at a loss. So, yeah. Okay, we're about 10 minutes to the hour. Max, what's another coin that people want us to look into?
We have 3 of them tied for second place.
Oh, okay.
Oh no, it just changed. Second place now is XRP.
Really? What were the other two?
Curve and Polkadot.
Interesting. Okay, I mean, let's look at XRP. Interesting. Curve and Polkadot. Cool. Okay. Yeah, Brian, want to start us off with just a general overview of where we are?
Yeah, absolutely. So circulation-wise, doesn't look bad at all. I see that, over the past 6 months, we've kind of fluctuated anywhere from, with the trend line sitting at about, what is that? Maybe 161 million tokens per day, and at a high here in late November at about 691, which is a pretty big difference between the two. But as of now, things are starting to rise again. It started to bottom out, getting below around 334 million, and now it's back up at about 429.5 million. So things are looking okay on the circulation end. Tokens are definitely moving. The price drop since November 10th, this is where a lot of tokens topped out before Bitcoin's all-time high started to decline. XRP's price has dropped about 38% in the past 5 weeks. And this circulation spike was the largest we've seen in about 12 days. Obviously, we saw a big spike here in circulation, which was the case for a lot of coins right at the turn of the month on December 1st, right before the big drop-off that was crypto-wide. So circulation looking so-so, maybe a little better than so-so considering it's on the rise again. And it's still looking better. This long-term rise right here is decent to look at. I would fathom myself. On the MVRV end, very interesting what's been happening here. There was a huge drop off, and I'd actually love to hear your opinion on this in just a moment, Dino. We saw an MVRV drop all the way to negative 77% on the 30-day. Now I have to presume that this is legitimate data, but it did happen. I believe it happened before the coin market cap glitch. So I don't think
happened
that
on that day. So it might be okay. So I'm just looking at its network profit loss as well, and it's also very wonky at that stage. So for you that have missed it, maybe a couple of days ago there was a massive sort of outage on coin market cap. Most coins were like they had no price or volume related data. We, as one of our pricing APIs, we do tap from CoinMarketCap's data. So there, some of the metrics that have a pricing component to them have been a little buggy the last couple of days. We've, I think, cleaned out most of them, but I think this might still be one of the remnants of that spike in CoinMarketCap's pricing API. That's one of the reasons why we're also looking into other choices, because CoinMarketCap, Doesn't look like such a reliable source. But anyway, yeah, I would say we're probably currently where we are is likely like real. But yeah, this drop off to like all the way down to like minus 77%, it's probably because of coin market caps
And the question
bugs.
is this negative 41% now still legitimate, or do you think it's still an effect of this MVRV having a lingering staying power?
Yeah, it could be legitimate. I actually looking into it now. It might actually be closer to like minus 25% now than
Yeah,
it is to like minus
because
41%.
price really hasn't moved much. I would
It
imagine
hasn't.
it's
Yeah.
still around here, which is still significant. You're looking at a negative MVRV that got as low as negative 27% on the spike, and this was indeed legitimate. So we're probably somewhere between there still and here at best at maybe negative 9%.
Yeah.
So all things considered, XRP is still looking like a decent opportunity buy. It isn't in that negative 15% or below zone, at least from what we would estimate if we had the real data here, but it's probably very close to it. And that's a better sign than average that a price bounce can occur, again,
Yeah.
assuming that Bitcoin's health looks okay.
I mean, thank you to whoever requested XRP. Sorry that we are using this call as sort of a bug bounty program, but yeah, there was a. I mean, we announced it to our users as well. Just a whole lot of issues with CoinMarketCap's pricing API and any. So this metric MVRV, it obviously like it's an on-chain metric, but it uses pricing data in its formula. So that kind of messes up the stats. What I like about XRP, another metric that we should keep an eye on, is daily active addresses. I mean, it's a question of like I'm still not able to explain it all that well. We've had a Crypto Eddie on a call a couple of weeks back, and she was explaining the potential reasons why we are seeing such a massive amount of new interest in XRP as a token on a network level basis. So look at this, right? I mean, this is the amount of addresses interacting with the XRP token daily, and they have exploded in the last couple of months. Like even now, sure, there's a drop off. I mean, if you look at the last month or sort of since the start of the month, we are seeing it like a 40% drop off in daily active addresses, and they're still extremely high at about 81,000. So one of the reasons, if I understood Eric correctly, is that like there are new use cases for the XRP token. There are dApps and there are projects integrating the XRP token and within the XRP ecosystem that are now requiring this token to be used by proxy. And so because of that, we are seeing quite a lot of new interaction with the XRP coin on a daily basis. So generally speaking, I mean, this looks like a very strong uptick in the network level activity for the coin. It's been dropping the last couple of weeks, so I guess take that with a grain of salt. But overall, it's still a massive net positive. So if this continues, if it's able to like maintain this level of activity, I think it would easily be like, I don't know, probably like, I want to say top 10 or top 15 coins period overall, not just we're talking about like specific blockchains, but the top 10 to 15 coins period in terms of daily active addresses. I would assume. I'm not entirely sure. But just looking at like Bitcoin, Ethereum, there would be Tether, there would be a couple of stable coins. There would be quite a few coins that have maybe like 80 to 100,000 daily active addresses, but it's not a very long list. So if it is able to remain at this level, and if this level is legitimate, that's still a massive, massive amount of interest in XRP. Like it's some of the highest interest in the coin since the beginning of its network. So it's actually incredible to see. Remains to be seen. Like we're already starting to see it drop back down to like 80K or slightly below 80K at the moment. So yeah, keep an eye on it for now. But yeah, it's still looking good. It's still looking decent, Brian.
Yeah, all things considered, just like Dino said, this is a nice hill that we've seen over the past year, and it's still completely dwarfs where we were in June, July, August, September, even. So I'd be pretty encouraged by this, despite the shorter term decline. The network growth could be a little bit higher. Obviously, we saw a huge surge here, but I'm happier than with most assets looking at this chart.
Yeah, I'm looking at funding rates. They're kind of looking the same as Bitcoin. There were a few drop-offs the last couple of days, but overall they're quite flat. So I mean, for most of the market, we are sort of in this neutral or undecided funding rate territory, meaning people are just sort of employing this wait and see approach where they don't really want to move a bunch of coins. They don't want to ape into a coin or out of the coin, sort of short the coin. Without figuring out what the next move is likely to be. So yeah, it is what it is for the time being. But I think we can already start sort of closing it out, Brian. We are right on the hour.
Sure.
Generally, I think this last week was a week of consolidation in terms of Bitcoins and sort of markets price action. But on the other hand, it was a week where I think we're finally seeing the whatever euphoria there was left finally be extinguished. So if this is the case, and I think it is, but we'll have to wait for a couple of more days or maybe even weeks for us to really see it occur. If this is the case, like there might be a situation where in the next couple of weeks, as the market really turns net bearish, we see an opportunity for recovery. The problem that I'm seeing right now on the other side of that trade or on the other side of that scale is the fact that Bitcoin's fundamental activity slowing down as well. So alongside this bearish proclivity and bearish tendencies and bearish bias that we're seeing last couple of days, what we're also experiencing is like a 10 to 15% drop off week over week in the amount of network level activity for Bitcoin. So by that, I mean the amount of addresses interacting with Bitcoin, the amount of unique Bitcoin moving on the network. Overall, these fundamental markers of network health are starting to slow down. I just don't see a universe unless, of course, Bitcoin somehow magically is able to like bump back up to like 55K. I just don't see a scenario where into the Christmas holidays we see this massive uptick in network level activity. It could happen, I guess, but it's difficult for me to imagine. It doesn't mean that it won't, but it's just what I'm thinking. So if that really happens, we might turn back to like these levels where we were back in May and early June, these very low levels of network activity. And at that point in time, it's very difficult to get out of that trading range, that price range, because there's just not a whole lot of fundamental support for a rally, right? So, watch this space, be careful out there. I guess enjoy your holidays and say hi to your loved ones, but don't go aping into anything before you're completely sure of its like midterm potential. And at the moment, I'm just not sure about Bitcoins, but that's at least my opinion, Brian.
Yeah, my opinion is roughly the same. I think that it looks a little scary with so many declining on-chain metrics at the moment. Some look decent. Obviously, MVRV is an encouraging sign. Whale activity I'd like to see improved, but overall, just make sure to mitigate your risk, guys. Not investment advice by any means. Just be careful out there and try not to get too aggressive on every dip just because it's a dip, right? This is why we have these metrics so that we can really objectively analyze which dips are really great opportunities and which are kind of fool's gold just to get you back in so that slides can further happen. So keep that in mind. Definitely tell your friends and family about this channel if they're into crypto themselves. Your support, even just clicking that like button and subscribe button, are immensely helpful to our algorithmic journey to the top. So we appreciate all of you for continuing to check us out, even when markets look a little more gloomy. That's what we're here for. Rain or shine, to analyze the markets, and make sure to check out our Twitter as well. Both are appreciated, and I'm looking forward to chatting with you guys. I'm not sure what we're doing for Christmas Eve yet, but we'll make some sort of announcement to keep you guys posted.
Yeah, we'll let you guys know either way. Thanks everyone for joining. It was a great year of growing this channel and talking to you guys. Hope you had as much fun as we did. We hope to see you back into 2022. But I think we'll probably have another call next week as well. Okay, stay safe out there, guys. Have fun. If we don't see each other, happy holidays. And talk to you guys soon.
Bye, guys.
Bye, everyone.